I'll click the drop-down menu for the expected date, and let's just go down about 3 weeks. Let's just say September 21st. And now we'll go ahead and hit Calculate. We'll redraw the chart for us. And over here on the left, we're now showing the monetary theoretical gain and loss. If the stock was trading at any these various prices, $35, $40, and so forth, on September 21st. The chart was redrawn for us, so the red line is now showing us what our expected profit and loss would be if the stock was trading at any price on September 21st. We see our break-even is probably now around $51, $52. And down below in that expected profit and loss field, we're showing that we'd have a gain on the stock of $27, an expected theoretical loss on the put of $215, so our total gain would be around $55 per share. Theoretically, using the Black-Scholes pricing model, it's not really etched in stone, but it's one of the best expectations we can have. Well, what if I had a reverse sentiment? I wanted to run scenarios of what is the worst thing that might happen in the next 3 or 4 weeks. So the stock's currently trading at $50.30. What would my position look like if the stock dropped or fell in price down about $45 per share on September 21st? We'll just enter that in and hit Calculate. And now we see we'd have a loss of $103. But remember, the maximum risk we had on the position was $180. So even if the stock tanked 5 points, about 10% in the next 3 weeks, we wouldn't be near our maximum risk for the position. We'd be close. We'd have a theoretical loss about $103, and the maximum risk when we opened this position would have been $180. So you can sort of run your what-if scenarios on the profit and loss chart here in the custom spread tool. Does this make you comfortable? You know, if the stock does this or the stock does that, is this what I expected to see, or does this match my profit I'd expect if the stock did move up to percent? Okay, real quick, what I wanted to show is a common mistake. I had 2 discussions about this morning, actually, for RadioActive traders that called in who just started their PowerOptions trial. And they wanted to know, well, if I open the position right away, I'm from a covered calls trader, why wouldn't I just go ahead if I buy the stock at $50.30 and I bought that 55 strike put at $6.50? Well, I've got 180 at risk. Why don't I lower some of that now by maybe selling the September or the October 52.5 call? Well, you wouldn't want to do that, and let's see why. Scroll to the top here of the profit and loss chart, the custom spread builder. I'm going to go ahead and click on View Options. Let's just take a look at our September series. I'm going to open up that chain. Well, we wouldn't do that anyway. The 52.5 call. Abbott Labs has lower volatility, so the premium there isn't that great at all, only 8 or 10 cents. So let's pull up to October and see if we have any other values. Well, okay, so we could knock off about 45 cents or so from our at risk by selling the 52.5 call. Let's see what that would look like. I'll click right on the 52.5 call. It tells me it's now been added into one of the available blocks for building a custom spread. We're going to go ahead and sell one call. And even though the bid ask is between 42 and 43, let's say we got 45 cents for the October call. 52.5 strike call, let's put that in, click Submit. And what's going to happen to our position? Remember, our original risk was 3.2% or $180. And what happened? We basically doubled our risk, but not on the downside. See, now we're risking potentially $385 or 6.8%, but that's not on the downside. That's on the upside. If the stock does what we want and it moves up in price, by selling the call too soon and at a strike price lower than our protective put, we've obligated to deliver our shares of stock at a much lower cost basis in our position. We've increased our risk on the upside, and the most we could make if the stock was trading right at that short call strike price at expiration would be 0.9%. When we open the RPM, even if you're coming from a covered calls background, even if you're familiar with collar trades or calendar spreads, which this looks like a similar chart to a calendar call spread, we want to wait for the stock to move up in price, and then we're going to look to apply an income method. And let's take a look at that right now as well. I'm going to close out the profit and loss chart. I'm going to go back to our search screen. If I did all my research and analysis for the Abbott Labs position after I put in my criteria and have my values there, what I'm going to want to do next is we're going to add it to the portfolio to track the position. And we can do that with one step right here from our search tool. We'll select Add to Portfolio. Now, if this is the first time that you're using the portfolio tools, the only choice that you'll see when you select Add to Portfolio is the new portfolio selection with a basic starting point of $100,000. You can change that later, and you just have the choice to select that, and you put in a name for your portfolio, such as My Married Puts or Married Puts Positions, for example. But what we're going to do is actually put this into an existing portfolio I have called My Married Puts, and I'll just click Insert, and all of the information is going to be copied over for me. Did that select the right one? No, it didn't. It went back. Hold on one second. Let me go back. There we go. I'm sorry about that. It reset the radio button there. All right, so here's ABT. We're going to put this into the My Married Puts portfolio. ABT, that February 55 put, let's just do a basic 100 share and 1 contract. And since this is a paper trade, we'll keep it at 0 commission fee. If you did enter this as an actual trade, you'd put in your own commissions or put in your price per share, your price for the put, for example, or maybe a transaction date. And we'll go ahead and click Submit. Now this is going to link us into the profit and loss portfolio, my Married Puts profit and loss portfolio. We're going to see the existing open trades and the new Married Put we just opened. So at the top, before I do that, I'm going to just answer a real quick question. Mary wanted to know, is this being recorded, and if so, how do I access it later? Mary, this is being recorded. All of our archived webinars are available in the Learning Center. Let me pause here and show where the Learning Center is, and then we'll come back to our portfolio. I'm sorry about that. When you access your trial account or your subscription, from the main home menu, select Learning Center, and then select Webinars. And we see here are the upcoming webinars currently on the Intro to Power Options. Tomorrow, Kurt's going to be hosting a RadioActive trading presentation at 12 noon Eastern Time. And over on the right, you have previously recorded webinars. There's some on Introduction to Power Options, using the Power Options suite of tools, option strategies, open discussions, and radioactive trading. Mary, most likely I'm going to have this presentation replace Power Options for Radioactive Traders for 6/10/2010. So it will be in that webinars listing under the Learning Center in the Radioactive Trading archive, and this will probably be available Friday morning. All right, let's go back to the profit and loss portfolio. We were analyzing that position. There we go. All right, so here's our Abbott Labs position. My quantity, 100 shares, opened on September 1st. Total net cost for the stock and for the put. My original issue price, $50.24 for the stock, $6.55 for the put. My effective cost per share, we haven't made any adjustments, so my effective cost per share on the stock is still $50.24. And then we see we have a small loss on the position. The stock is now trading at $50.20. This is in real time. The current price and the put, his bid-ask spread difference is down to $6.45. So just on the position itself, we have a loss of $4 on the stock, $10 on the put, small value changes as well, percentage-wise. Now, what I always do in my portfolio is I prefer, up at the top, to check the box here for View Position Analysis. At first, you might not want to do this. It adds 6 columns over onto